After sipping a soda, we got a scheme. Somebody else plays the record machine. It's so easy to say Pepsi.
Howdy, and thank you for joining me. Brandon Safford, certified business broker and partner with Business Acquisitions, for this quick summary of the Economic Aid Act. This will be very important to those of you who are business owners, and to those of you who are lenders, and to those of you who are business brokers. So we're going to go over a lot of stuff very quickly. As a fair disclaimer, I am neither a lawyer nor an accountant. I'm a big bad business broker. So additionally, there may be some information in this that has changed, but as of January 8th, 2021, according to the IBVA, these are some of the takeaways that you are going to want to be aware of. Now, starting first, if you did not take out a PPP loan in 2020, there has been a number of improvements to the process that will make you want to apply this year instead of last year. Also, for those who have not applied last year, first-time applicants, Monday morning will be considered before second-time applicants or second draw applicants on Wednesday. So, whenever you can, contact your accountant, contact your tax advisor, contact your lawyer. Ask them for any updated information that they have about the PPP or the CARES Act as it regards your business. There are going to be some things that are different, but in general, the limit will be raised approximately to $14,000 per employee in terms of payroll. You will be able to take out a loan for approximately 2.5 times the amount of your payroll per month. Independent contractors will be able to qualify for these loans. The big benchmark qualification is if your business suffered a 20 to 25% or more reduction from 2019 over the course of an entire quarter or more. So if your summer quarter or your spring quarter or whatnot in 2020 was a complete dumpster fire, compared to 2019, you should have no trouble at all getting a loan or getting approved for it. Additionally, the first lenders with access to this are going to be the small community lenders, not your large banks. So if you want a head start, you need to avoid the large banks like Bank of America, Wells Fargo, Chase, and so forth. You don't have to have a pre-existing account at the lending institution that you apply to. They might ask you to start a new account, but you don't have to have been a member for a minimum period of time. Also, in order to be first in line, you have to be an employer with a small business. We're talking 10 employees or less, I believe. In addition to that, your loan, you're probably going to want to keep your loan under $150,000. Now, you might not even qualify for up to $150,000, depending on the size of your business. But if you can avoid going over $150,000, you want to. The reason being is that everything up to $150,000 should be completely 100% forgivable with no tax implications, with no tax penalties on top of it. Now again, I am not an accountant, I am not a CPA, I am not a tax preparer, I am not an attorney. So, there could be exceptions. However, from what I understand, the benchmark is $150K or less, easily forgiven. If it's over $150K or less, then your chances of being audited and the amount of paperwork that you're going to have to go through and the trouble in order to get forgiven is going to be increasingly difficult, up to the amount of $2 million. Any loan amount over $2 million will automatically be audited. The paperwork in order to get the forgiveness has been very, very simplified. If you took out a loan last year, there were several compliance logs and things that had to be kept. They're simplifying it basically down to an affidavit. It might get a little more complex than that, but basically you just have to sign a piece of paper that says, yep, I used the funds for what they were supposed to go to. Please forgive me for my loan. There are a lot of new expenses that are being allowed, including things like the expenses for working from home, worker protection expenses, property damages from civil unrest, new operational costs in order to change the way that you're doing business in order to survive. This is in addition to the payroll and lease or mortgage expenses. You can also now deduct 100% of your business meals for 2021 and 2022. So this is pretty exciting. For those businesses who regularly give charitable deductions, the charitable deduction limit has been raised to 100% of your AGI. So that's another very nice thing that we'll be seeing from it. Let's see. Again, if it's your second time to apply for a PPP loan, you're going to have to wait until after Wednesday afternoon. You're going to have to go through the same lender. You can't go through a different lender for your second PPP loan. Outside the realm of PPP loans themselves, EIDL grants can also be forgiven now. This is pretty huge for those who took out an EIDL grant or were thinking of getting one. It's an interesting alternative to a loan. Technically, also, you can use both EIDL and a PPP program. You just can't double dip for the same time period. So both tools are available to you. You just can't double dip for the funds. So use the one that will most heavily favor you. The live venue grant programs are now available for people whose businesses depend upon a public venue, such as a theater, a concert hall, a museum, things like that. You can now claim up to $10 million or 45% of your gross receipts for 2019 when you're attempting to get that grant. So please keep that in mind as well. As far as emergency rental and utilities assistance, that's right, they've added utilities to it as well. Both heads of household and landlords can now apply to this. This is very different from what went on in 2019. As far as the 7A debt relief program goes, there's some very nice little perks coming along, such as 3 months payments for existing loans, tax-free. If it's a new loan, you could do 6 months. And for hard-hit sectors, you have 5 additional months that can go into this. Base loans are now for 8 years and not 7 years. There are lots of perks for employee retention. Please check those out as well. And lenders now have the right to provide a full payment deferral for 12 months without additional approval from the SBA. So, if you have additional questions or concerns or topics that you would like the Business Podcast to cover, please email me, Brandon@business-acquisitions.com. Have a great weekend.